The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this Friday, the 23rd of October. And what an interesting market this has been. Now, as I had an email saying, as soon as the same repeated modus operandi of QEs come into play, the best thing is not a trade, just to go straight in and buy and hold. And you know, I can't really disagree with that. And one of the things I've been looking at so closely was the Dow 17,350 was 15,370. Sorry, the low of August the 24th. I'd say that the Dow probably won't get to that, but we might be testing inside in the low 16,000s. The S&P and the other indices had somewhat different chart patterns. They could do further testing. As I see it right now, because of the confirmation on a weekly chart that we've been looking at for my Dow Quartet, GE, IBM, Triple M, that's 3M company, and UTX, United Technologies. General Motors, Ford, we got to add. There is something that's going on that is very different to other times. Maybe it's interest rate related, maybe it can't be dollar related because the dollar is holding extremely well. So you remember that was the big thing about why the multinationals were going down. So let's talk about all that. I want to do technical analysis. This is Chapman Wave Friday, where we spend a lot of time when questions come up on the actual technicals based on the Chapman Wave methodology, a myriad bunch of techniques that I've developed over the years. Remember, we were talking about the Stork-like formation. Let me go through the numbers right now. Dow's up 123 at 17,612, just pierced by a little bit the high that was made on the left side. I'll show you those charts in a moment. Let's just go through the numbers so I don't run out of time. The S&P is up 19 at 2,072. The comp index is up 96 at 5,017. Gold is down 3 at 1163. The dollar is up a little bit. Dollar's up 0.61, actually quite a bit, a lot more than a little bit. The euro and the Great British Pound, etc., are down. Bonds, now it's going to be very interesting. Down to 1.5 with the TLT coming back a little bit down 90. It was down a little bit more. 122 is really the key support for the TLT. It's at 123.27. What's most important here is that those commodities like crude oil just stuck at 44.80. High-grade copper pulling back to 2.36. Platinum's down 5. So that whole area of commodities, the inflation, the measurement that is used for inflation by the government. Now, these are people that probably have not been to your local supermarket to buy anything and compared. I was looking at something the other day, and I opened the packet, and I poured the packet into a bowl, and I thought, wait a minute, there are far fewer than I expected, and it's just everywhere. You're paying more and getting less. That is inflationary. But it is not measured in the classic way. So let's go to this chart now. Those are the numbers that we were looking at. Let's go to the nitty-gritties. The 10-minute chart has made a peak E, an alternate count is, let me see, C, D, yep. And it's at 2,074.50, and it says by 1 o'clock it should be at 2,064, having made a 2,074.50 high. It should be testing the 2060 level around about 1 o'clock. We'll see if that works out. This is one of those arch formations. Now, this is a beautiful pattern. Learn this pattern. When you see a little narrow trading range like this declining in a channel, but a very narrow channel, it's just kind of popping up and down as if you've got a tube with little bouncing balls in them, and you turn the tube to its side, so it's tilting down, and the balls keep going, little jumping beans, and they keep going bounce, drop, and they keep within the channel. So what's most important is it stays in the channel and uses up time. I have another technique, and I wish, maybe I'll ask Trade Station if they can do it. I would love to be able to pin right there, to pin something like you would have a tack, and I'd like to go down like this, and then just swing it around without losing that exact measurement. In other words, I'd like to go like this, swing it around, swing it around. Of course, I'm losing that exact dimension. And that's really what it's just a beautiful technique that I learned years ago. I have to do it visually. But what happens is in this little narrow down channel, the moment it starts to break out, really break out, it can be a powerful move to the upside. And that's what we saw in the 10-minute E-mini. So it spikes up. Remember yesterday, we were talking about Chapman Wave instant restart. I was on the air right about this time, and I said, I think the 10-minute has made a short-term top. And then I drew this in, and I said, we're going to see whether it holds the support down at the 2036 area, or if it takes it out decisively, because then you've got the Eiffel Tower, that inverted uppercase A, straight up, straight down pattern. Well, it held it beautifully, went to tad under, but it's quickly popped back up and started another move that went to peak A, B, alternate count E. Now, this is going to be very interesting. There are times in the Chapman Wave where you have to use some, how can I put it now? There are scientific things that I do in mathematical formulas where it's absolutely the fulcrum is the midpoint, and you want an exact measurement. And the other times where it's a visual thing, and you say, you know what, visually, everything about this big spike up the last 10 minutes from 7:20 this morning, huge spike. I was busy doing my E-mini report, in fact, and as I was doing it, I had to do it twice because I was saying there could be a pop-up, and then not only was a pop-up, it went from the 10s, plus 10, to plus 15, and then went to plus 20. So it went to 2074.50, and now it's pulling back in this kind of lower highs and lower lows pattern. And that suggests to me that we've kind of made the move for now. So I want to get into what we're looking at. So the alternate count says that this could be a G, or it could be a brand new peak C going to a D to an E. Whatever it is, the pattern itself lent it. I looked at it and said, this is the same thing, and we should be pulling back. So I put a little, once you've used up the down arrow, the next peak that doesn't fulfill a D gets the inverted caret right there, that inverted V right there. So that says we've made at least a short-term top in the 10-minute chart. Remember, I'm talking 10 minutes. Let's get out of that. Technical Friday, I want to show you something else. Remember the pattern that I've been talking about for well over a week now? Since the Freeman low at 1861, round number low on the 29th of I said the 6th, it was not the 6th, it should have been the 9th. Excuse me, so let me just change that. The 9th. I call it the Freeman low because Freeman called and said, I've just got the E-mini, I got it at 1888, and what should I do? And we discussed all the different things so we call it the Freeman low. So I have no idea. Freeman's still in. Can you imagine 1888 to 20? What was the high? 2074. Now, I would say that 200-point move is a pretty big move. 20? What did I say? 20? No, 1888. Yeah, 200 points. So look, we had the pattern that I call the stork leg. Let me make this a little smaller so that you can see. This is the 120-minute chart. What is the stork leg formation? Called the Chapman Wave stork leg formation, since this is something I discovered. It goes straight up regardless of the number of peaks, but usually at a peak D or somewhere around a D, maybe an E, it'll stall, or a C, and then it'll go sideways, which is exactly what it did, and it makes the body. It is not a rectangle formation. It is absolutely an oval formation. That's what creates the body. And then the body goes on for a while. Now, this is where I would like that fulcrum. I'd like to go from there to peak C 1980, from 1883, and then swing it around. Let's see if I can do it now. Look, grab that there, swing it around. Take your partner by the hand, swing around. Okay. And there it is. So we've got almost a one-to-one measurement there, all right? And then it takes off, and it starts the neck formation. Then it goes to the head. This is a complex head. It turned out that the head itself at 2014, round number high, was actually forming a second Chapman Wave stork leg formation. gets to the head at 2014.75, a rogue wave spike to the upside, and then plummets down. What was the rule that I kept telling you about in the Chapman wave methodology? That when the beak of the stalk leg finishes, of course, you got to know exactly when it's finishing, but when it does finish, and there are different ways of measuring it, a very powerful move to the upside can start. I discussed that yesterday. I mentioned it to my subscribers on my opening call when I showed the E-mini charts of the 120, the weekly and the daily yesterday. And we were at about 18, what am I saying? We were at 2016 or so. And I said, this is a balance, but so far we haven't got the real powerful move. Now, the rule in the Chapman wave methodology is that when the beak, now let me just draw this again. Remember what we were discussing? You've got a leg, you've got the long body, you know how a stalk stands on one leg, it tucks the other leg underneath, and then the wind can blow and everything. It doesn't put the other leg down for balance, it just gets that balance for some reason. And then there's a neck. And the neck, I said, in this, there's a 1-to-1 fulcrum with an airplane propeller shaft pattern. But a stalk leg formation mostly has just a minor move to the upside for the head, then for the neck, and then the head could be either a single move down or it could go sideways as it did here, where it was a combination head and a body, and then it turns down. Okay, and then the beak, now I can draw the beak in. The beak can go either just inside the top of the oval, or it can go inside the oval, or it can break below. When it breaks below, and in this case, very unusual, it broke below. It went underneath the lows of around about 2012 in the E-mini. It went to 2,750. But the stochastic reversed very sharply and the MACD turned up. So now what we've got is something a little different. You've got the beak that went below. When it goes below, invariably, you're going to have some stalling action at the top of the body. That would have been 2028. 2028, are you kidding me? This thing just went right through at 10 o'clock yesterday. It just zapped right through and went higher, and it closed in a leg B. I think it was a peak B or maybe a leg B at 4 o'clock. Yeah, it was leg B. Then it makes a peak B, goes to a C, and then it goes to a D. This is the 120-minute E-mini S&P December contract. Now look at this. So now all of a sudden, this is the 1, 2, 3. This is the third move after 3 Chapman wave stalk leg formations. It's really unusual, and it is really unusual in a 120-minute chart. And then what happens is a 1, 2, 3, and now you've got the beak, and now you've started another move to the upside, and it goes in the 120-minute chart. What's the objective in the Chapman wave methodology? To get you to a D, to get you to a D, to get you to a D, to get you to a D. And then you can expect some kind of a pullback. Let's pull up this 10-minute chart and see where it is. And there it is. There's the old Chapman wave inside wedge, left side, right side, price time match. We'll see if we can tackle 2060. We're at 20. We just did it. Okay. So we just went to 2060, and that's going to be very interesting. So we did that. We accomplished that. I'll be back. Now we'll talk about the markets. Thanks for being here.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman, Dow's up 100, S&P's up 16, and we're going to go to our first caller. We've got Robert over there in Chicago. Robert, how are you?
Hey, Basil. How are you? Thank you very much.
I'm well, thank you. How are you doing?
So, Basil, I want to congratulate you. The other day I called about Proctor. You said wait for it to come down another $1 to around 73. It came down. You thought you might get a price of 73.40, which you mentioned would be a good buy. I think it came down to around 73.50, 59. So you buy it there, and I'm curious, after today's action, do you see longer-term monthly a little different today versus 3 or 4 days ago when I called? I thought your long-term view was it might go back to 68 or 65. So can you put it on like longer term, like a monthly, a 1 year monthly?
So this is what I've got, and let me explain to you what I'm looking at here. So I've got the chart. I'm not sure if you can actually see the chart. This is the very long-term monthly chart going back to.
Thank you.
I could have gone much further, but I've gone down to the 2000 low, around about 28 or so. And now let me just move this away so we can see. We're looking, folks, at Procter & Gamble, healthcare products, etc. The pattern that I'm looking at suggests very strongly, and this is the reason why in many of the monthly charts, I'm still of the opinion that there's going to be one sudden negative phase of news that gives the real test of where the floor is. Now, we've raised the floor in the Dow because of the spectacular move that we've had. The other ones have been raised, but not as dramatically as the Dow. And I said before that Procter & Gamble, part of the Dow, Procter is part of the index that is acting the very best at this particular time. And this is the traditional way that I've always looked at markets, that the Dow, the only time it didn't happen was back in 2000, where my estimation was that the Dow would go up to the 17, even the 19,000s before there's a major crash type move to the downside. But then when I saw that the NASDAQ was usurping all the money that went traditionally to the Dow, I said, you know what, the NASDAQ will never make its get back to this all-time high that we're looking at in March in my market lifetime. Well, I hope I have to apologize for that because I'd love to see it go back. It hasn't gotten back yet, but it's real close. So now let's go back to the Dow. Let's go back to Procter & Gamble. If I'm looking at the chart patterns that have formed, look at the way in, are you able to see my chart now or not?
Yes, I am.
Okay, so this is in December of 2007. The monthly chart opens at round number 74, goes to 75.18. It is really, it's almost staggering odds to be able to get a monthly chart to start the first of the month with a round number. And this one did it. And what happens is it makes a doji candle in December. January, it just goes whoosh from the 75s down to the 62s. Then it goes sideways and makes the H pattern that I always talk about, that lowercase h pattern, takes out the low, tries to rally, and then it does. It actually rallies all the way back to 73.57. Another round number 66 low. Then it pulls back under the 9-period moving average, and kaplop, it goes down to 43.93. That's a 30% decline. Now, what's really important about this is that it just about touches the 200-period exponential moving average, makes a beautiful candle, reverses with a stochastic and MACD, and this was March, I think, March of 2009. It goes quickly to peak ABCD. Then it stalls and it goes peak A, B, C, doesn't take out that low. It goes on to a D, pulls back and starts an E, F, alternate count, and then it goes to a G/C, and then it finally goes to a D, and that D is in December, now it's again December of 2014. So we've gone 6 years, and we make that top. But now if you look at the technicals have deteriorated just as they did then. But the difference is, and this is very important in my work, whenever I give a masterclass or a series that's based on the MACD or the stochastic, I talk about declines that go in one fell swoop to the downside, or ones where the fast-moving average has a little hiccup and then comes back down, as if it's 2 waves to the downside, or maybe even 3. Well, look what's happened. The MACD and stochastic have gone straight down. So that allows a very strong rebound, and this rebound is taking it right to the 9-period exponential moving average of 77.70, and today it's trading at 77.03. Here comes, this is the answer to your question. So you do have a position, but you wanted to add, I'm just trying to recall how it worked.
Yeah, I do have a position.
Okay. So this is the way I would look at Procter. First of all, we spoke quite a while about defense stocks like Raytheon and defensive stocks like a Procter & Gamble, the old Gillette or anything like that, Clorox, something like that. Those are defensive stocks. So this little break gives me just an opportunity, because I just want you to nail a couple of numbers here that I think you can look at, because a gap up to a peak E to the 200-period moving average on a Friday is always a big hesitancy for me. I think it'll be pulling back. We'll be back with Robert.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. We're on with Robert in Chicago. So, Robert, this is what I was looking at during the break. There are a couple of things. Actually, there are a lot of things that just struck me as very important at this exact moment that we're talking. First of all, so you didn't add to your position and missed it by about 10 or 12 cents or something. Is that correct?
That's right. But
Okay.
Your call was perfect.
Okay. So now what we're looking at, thank you. What we're looking at here is the rectangle formation. Is really what we're looking at. I'm just going to do this so people can see what I'm talking about. I'm talking about if I go to the Dow, you see that there's basically a rectangle formation here and another little stork leg formation just there, which was matching the GE chart that I was talking about the other day. So this here to me is extremely important. This is a technique that I talk about forever. Whenever there's a news-related event and you get a massive gap up, especially on a Friday, I talk about the chance of a flagpole, and then you come back down and you start to move to the upside. That should take you in a smaller time frame to a peak D, and then that's where you got to get real careful because it'll take you to the upper band. Well, we just did that exactly, that same thing, but upside down in the Dow, and that the level that I said to subscribers that we were looking at. I didn't expect it to, absolutely did not expect it to happen this quickly, even though I drew it in with the left side, right side price time match. It just didn't, without the news of the QEs, I don't think we would have got there. It doesn't matter. The fact is we did get there. And that level of 17,568 in the Dow from the 18th of August, we went right through it today. We went to 17,655, 90 points higher. And where are we traveling at right now? At exactly 17,568. What was the number we were looking for? 17,568. So as a result, I should just mention this, that we took a position in my opening call today, which was expecting, and now you've confirmed for me that I can have at least a little bit more confidence in the move, because I needed to see a lot of things happen, and they just happened. Look, remember I just said a peak E gap up on a Friday. Was there earnings or anything today?
Yeah, they came out with the earnings, and they were awful, but flying.
Oh, but maybe they're going to buy back, right, or something?
Yeah. Well, they're getting killed by a strong dollar.
Okay, so here we are. A peak E and 120 chart is a peak. It's an alternate count. I'm looking at this, and I'm suggesting to you that that was the best that we could have ever expected from the low that we were talking about in the low 73 level to spike up to, what was the high today? 78.45. That's an 8% pop in one day, right? And
right.
At this point, it's only up about 3%. So I'm looking at this and I'm saying, okay, all the technicals that I'm looking at, the stochastics pulling back, it's under 80%. The MACD's made that M formation. I think that now is a difficult time to be buying Procter & Gamble for that short-term spike, because we've just had it. Now I'm going to say to you, have patience, because I suspect now this is one of those things that's somewhere in the back of my mind. I'm doing all the calculations. I don't know where all the information is coming from. It's just sitting there dormant, and then it gets activated on a day like this. My thinking here is that actually fund managers have finally gotten back into saying, you know what, dividend stocks, I like dividend stocks. So I'm going to suggest to you that Procter might have been making a spike that could pull back. I don't know about now the 68 level, but I do think that over the coming 2-3 weeks, if there is a pullback starting on Monday, and if Procter gives back, goes under the gap low of today, 76.31, trades underneath that level for 2 sessions, there's a real good chance we've seen a short-term spike culmination on the upside, and that Procter could start to trade sideways. And my target then would be between 72 and maybe 71 or 70. That area is where I'd reassess and I say, okay, is this the time to be looking at Procter as a buy for an intermediate term buy and hold based on capital appreciation and dividend? That's the only time I want to be looking at dividend stocks. If there's capital depreciation, I couldn't care less whether it's giving me 4 or 5%, because you could lose 12% in your capital. I'm not even interested in that. So can I do this? Let's see. So so it's from the 73, yes, to the 78 levels, 5 points. So that's about 8%. We've already done that move. My thinking here is that Procter now should start to relax. It's at the 200-period moving average. It's broken just above the inside wedge target line. It hit it to the day. If I take the low that was made, whoops, it did it one day early. No, it's exactly to the day that it made the left side, right side price low from the 14th, the plumb line, I call it. I think it's going to be pulling back. So all I'm going to say to you is now hold off, keep your position, but I would look to add to it if over the coming, I'm giving it 3 weeks, over the coming 3 weeks, if Procter pulls back to the 73s, I start looking at it, but it's really in the 72s that I want to make some kind of assessment. So I'm going to ask you, can you call me if you see that at any point?
Yes, Basil, absolutely. And great analysis. Thank you very much for that, Basil. But can I ask another question?
Sure.
If you noticed last year, and you referred to it, around October, November, December, Procter ran pretty high up to that 93. Do you think that will happen again? It may not run. It seemed like it went on a run the last quarter of 2014.
Correct.
Do you think that will happen again? Maybe tax loss or tax selling or something like that?
So, okay, that's a really good question. So let's Now I meant to do this. I actually forgot about doing it. I meant to do this because I did the homework while we were at that break. So now I'm going to say to you, because if today Proctor closes above the 200 period exponential moving average in the weekly, that would be at around about 76.80. So it's at 77.14. That'll be the first time it's closed above it since it broke down back in May. And that's going to be really important. Why? Because what it's saying is that the 74.09 level of the 9-period moving average is going to become even more important. Why? Because if there is a little arch formation and it starts to pull back, if it starts to trade and then close under the 72.20s, let's call it 72 level, in the month of November, then I have to say, based on the monthly, it needs even more time to be building strength in the MACD and the stochastic. So the weekly is starting to improve a lot. It's not fantastic, but it's improving. I think it still needs a little backing and filling off the spectacular move from the low in the 65 area to today's high of 78s. That's a monster gain for this stock. So I think it needs time, and I like it as a potential for making large arch formations. The big thing is, if we don't get to talk to one another, and at some point in the next 2 weeks, you see a price of 82, let's call it 83, 5 points higher, 6 points higher in Proctor, that's spectacular action. That's saying, wow, the fund managers are absolutely in love with this kind of dividend stock. And that's why I don't want you to touch your core position. I'm saying the add-on position would be on a pullback of about 3 to 4 points. Let's start looking at it again.
Great. Thank you very much, Basil.
And thank you for calling, and thanks for pointing out the Proctor, because it's very important to be looking at all the different sectors, and as a defensive sector, this is acting well. Thanks for calling. Have a great weekend, Robert.
Okay, thank you.
Thank you. So, folks, let's do this. I want to look at Amazon. Look, I'm talking about Friday. A Friday gap up to a D or an E is something historically, I've looked at it and said, uh-oh, be a little careful here, because it's usually news-related. So here we go. Amazon. Where's Amazon? Amazon just gapped up to leg D in the daily, leg E in the weekly. In the weekly, leg D in the monthly. It is looking superb in terms of the longer-term position, but that doesn't mean that it can't pull back and give back some of the gains. So now this is what we're looking at. If Amazon are trading at 603.60, up 39, up 7%, must have been news there as well. Starts to pull back, so now there's a gap up. This is very interesting, because I have to treat the gaps. Now, there are a couple of them that say this could very well be leg B, which says, yeah, there could be a little bit more upside. I think just a little bit more upside if there is. But the way I'm looking at it, there's a good chance you're going to have some kind of a consolidation Monday and Tuesday. So let's just get that out the way and say, Amazon, daily, MACD is good. Stochastic's only at 75%, and that's saying to me that there could be a little bit of backing and filling into the 590s, maybe the 580s, right? That's number one. Number two, if I'm wrong, by Tuesday, no later than Tuesday, Wednesday maximum, Wednesday morning, you're looking at Amazon and it's up at 628, 633. I just don't see that right now. I think this is kind of a gap to the upside that is going to need some work to digest. So let me put this in here. We've got an E in the weekly chart, and we've got a D in the monthly. So far, technicals in the weekly are very good. MACD, stochastic's still not yet strong, but the MACD is good. The 82% in the monthly chart is really good, and that's the reason why I can't believe that I missed it. It was on my list as one of the stocks on the next big pullback that you just got to own for the grandkids type thing, okay? And I didn't do that. I apologize to my subscribers. We just didn't do that. We had a chance when it dropped into the under 500. So now we have to wait, and that's all there is to it. That's Amazon. Google. I'm looking at, if you don't mind, I'm looking at Google. I'm not looking at the trading stock. Google is in A, B. Now it gapped up to an alternate count. Let me double check. 650.90, 650.61. So this is alternate count, and I am going to use it as an alternate count for a number of reasons. This is E/B, F/C. Friday, gap up, news-related event. I don't know, it must have been earnings, and it's gone to an E. And in fact, that down arrow has to be negated. It is canceled. Why? Because It was a very sharp move, but you know what? The MACD did not cross negative. I have to put a plus and the next one or two candles on the upside that make either E or an F. That's going to get the down arrow if the MACD crosses negative. Stochastics at 77%. Monthly chart is in leg G/C. Wow, it really does look like these things are going to go to Ds. So Google is acting extremely well at 712 up 60. Can you believe these numbers? It's an amazing thing. I don't recall ever seeing so many stocks that are in the four digits, four numbers, the high threes and the fours, like Priceline, etc. But we got a call. We got Tom in Plymouth, Mass. Tom, how are you?
I'm doing pretty well this morning, Basil. How are you?
I'm well, thank you. So you'd like...
Looking, got into the dust yesterday. I'm wondering what you think, maybe a quick trade on this, and maybe what your thoughts are on where you think gold's heading in the next couple of days.
So this is dust, which is dust is the gold, the direction, daily gold miners 3 times BR. What does the BR stand for? Dust, I think, would be on the GDX, right? Let me just see.
Yes, the opposite of the GDX, yes.
Okay, so it's the inverse. GDX has made a peak D. That's the gold miners market vector ETF. ETN, no, that's an ETF. And okay, this is going to be very interesting. I have to just quickly look at the dollar, if you don't mind. You see, the dollar had a spectacular move yesterday. Today, it's continuing that move. And you remember, I don't know if you heard the show yesterday. I did my show and I also did Daryl's show, especially because I wanted to spend some time looking at the charts in terms of breakout levels. And what I'd said is that the dollar is approaching the dashed downtrend line. And within the next 3 to 4, within the next week, it has to trade in the 97.50s, actually a little higher, maybe. Let's call it 98s, to really break the downtrend line and suggest it wants to go and test the previous high of the 7th of August at 98.33. Now, because of the spectacular move, I have no choice but to call this brand new leg B in the daily, because I've got a B and it's blue, it's not gray. It is absolutely, everything about it suggests that this is a move that should go high. It doesn't say how high, but it says it should go higher. And I'm really impressed at the monthly chart, making a potential cup formation. I'm inclined to say a quick trade on something like a gold ETF. In this case, it is the, so this is the one that goes down when gold goes up. And when gold goes down, this one should go up. So now let me just think this through. Right, so it's inversion. What number is it? Is this 2 times or 3 times?
This is 3 times.
This is 3, that's right. Yeah, I've done DZZ fairly often, not recently, but I had done it fairly often. That's 2 times. I just haven't done the 3 times. So, all right. What kind of risk are you prepared to take? Because it's Sunday night and Monday. There's an overnight risk. So what kind of risk? It's a 1287. Are you prepared that, in fact, it could gap down, say, 60 cents, which is like... so 60 cents would look, now it's only down 21 cents, and that's minus 1.61%. The risk to the reward, since I'm looking at the dollar, says the dollar should continue. I should be looking at this and saying, so far it's a successful H pattern. I know what I'm going to do. If you're prepared, are you able to trade this on Sunday night, or is it only during market hours?
Yeah, only during the market hours. So
yeah, I thought so.
That's what I'm concerned about, too.
Yeah, because I'm concerned about it, my thinking is that you might miss the move on Sunday night, but you might get it on Monday. So can you hold on and I'll give you my recommendation?
Certainly.
Okay, that's great. We've got Tom in Plymouth, Mass, just down the road from me. I actually went to a great wedding near Plymouth, Mass, and I'm trying to think of the town next door. It was a beautiful venue. What a beautiful venue. Okay, I'll be back with Tom straight over this. Downtown up 89, S&P's up 14.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
All right, folks, we've got Tom in Plymouth, Mass. Just want to real quickly show you, look, we hit that target exactly right down there in the E-mini. It's pulled back at 1 p.m. It broke it an hour earlier, so that's that. Then I got a whole bunch of questions, but I want to go back to Tom. So, Tom, this is what I'm going to recommend that you do. I'm just a little concerned that the dollar could have just a brief pullback starting Sunday night instead of Monday to make a peak B before it goes on to higher highs. So why don't you have a little patience and see if you can get the DUST, D-U-S-T, trading at 1282. See if you can get it by Monday morning at 9:30, just between where it is right now and 1250. And if you can start a position at that point, then maybe even call me during the show on Monday. But that's where I would start it, because if you did it now and you're wrong, I don't want to see you, sweat it out over for no reason at all. I'd rather have missed opportunity than a problem. So I don't know if that suits you, but I would say hold on. If you can get it just a little bit anywhere from here, 1281, to a little bit lower, I would say great. That's a nice entry point. And then I would have, if you're able to do it, I'd have a 20-cent stop. If that's not too big for you, I'd make it even a 15. I'd have a fairly tight stop. 20 makes sense because, you know, this thing can wiggle around quite quickly. Does that suit what you're looking at?
That sounds great, Basil.
Okay, so here's the thing. If you do get it and there is a sudden spike, and it might take you until Tuesday to see it, and all of a sudden you're looking at not 1275, but you're looking at you're looking at 1375 above the 9 EMA. You're in the right position, and then I would just raise the stop so that you've got a break-even trade at worst and see where it goes, because it should rally. As long as the dollar's rallying, dust should go the same direction. Hope that helps you.
Great. Very good. Thank you.
Thank you very much for calling. Have a great weekend. So let me do this. I'm going to work backwards. Hey, Basil, great call, hanging in. Okay. I bought the EE minis at this AM at 2070. I have a swing target of 1980. Let me just do this real quickly. I'm doing it on the 120-minute chart. You've got to look at the base of 2057 to 2050 is going to be very strong support, and it should be bouncing from there. And then I'll deal with that on Monday. But over the weekend, if it's going to be pulling back, that's what you're looking at. So that was from Chris. Now, the next one is going backwards. Julie asks, Draghi said QE causing this rally. Can central bank, after central bank, keep the markets up for years, therefore nullifying the Chapman wave? Just like normal, rather than normal markets. Julie, Chapman wave has nothing to do with Draghi. It has nothing to do with the C. It has to do with my calls, my interpretation. Look, you can look at this chart here of the Dow, and all it does is it goes to peaks and valleys. Let me do the Dow diamonds because that's the one that actually is the clearest of all. Went to what? A peak F. What do we look for in the Chapman wave? We look for peaks and valleys. And peak E to peak F is where you got to be real careful. The MACD and everything broke down. That's where you got your decline from 183.35. I had no idea about Draghi. I had no idea about QE. I just looked at that, and that's important. But now we've learned that the QE is, in fact, a huge factor because it gives a base. It gives financial incentive to fund managers to actually be buying stocks, and also because historically we've seen that. So the answer is we'll just keep doing the Chapman wave. Next question is, SPX rally. Is this V-shaped rally too strong where you say downtrend is over? Is this Chapman wave restart? Yes. I think that what we're looking at here is, unless there's really bad news, and I said this the other day about General Electric and General Motors, what on earth could take them back? What could take GE back to 19s? I don't know what it would be. It would have to be just a catastrophic series of events. So I think the Dow has made its low. We're waiting for the next big pullback, and that's where we want to set up positions that are more intermediate term. I think that this H pattern in the S&P that has now turned into a strong move up towards resistance is telling us that there's a lot of base support, and I'll talk more about it when I send my charts out this weekend to subscribers. Talk about it next week. Oh, I missed a couple of questions that I got as well. But I'll be back on Monday. Have a wonderful weekend. See you then.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.